In this video, we will explain what the average true range or ATR indicator is and explore ways it can be utilized to enhance your trading strategies. Average true range is a volatility indicator that measures the average range between the high and low prices of an asset over a specific period of time, providing valuable insights into market volatility, which can help traders make more informed decisions. The default ATR on the IG platform is 14 periods. If you are on the hourly chart, it is calculating the average range for the last 14 hours. And if you are on the daily chart, it then calculates the average range for the last 14 days. The period is an adjustable parameter, and you can set it to a period of 10 to calculate a shorter average or a period of 20 to assess the longer-term volatility. If the values on the ATR are low, it indicates that the average length of the candlesticks are short or currently trading with lower volatility, and a higher ATR would mean that the average length of the candlesticks were longer or currently trading with higher volatility. As this is a volatility indicator, the value that is reflected in the ATR does not provide any indication of the market trend. So how can traders utilize the information this indicator provides to make trading decisions? Traders commonly use this indicator as a risk management tool to determine an appropriate stop-loss level. When there is higher volatility in the markets, positions would be closed out if the stop-loss level is too close to the entry price. The ATR helps traders to measure what the average volatility or range is, which can help them to determine where to place their stops, assuming you are bullish on an underlying market and you want to go long. One popular way that this indicator can be used to manage risk would be to multiply the ATR by 2 and add that below your entry or a potential support level, and that level would be your stop loss. By using ATR as a reference to indicate your stop loss, this allows you to have some buffer on the current market volatility and helps to prevent your positions from being stopped out prematurely. An example would be that if the ATR for stock ABC is at 50 cents, this means that you can indicate a stop loss that is $1 2 times ATR below your entry price. If the ATR for the same stock is at 20 cents, by using a 2 times ATR approach, the stop loss would be 40 cents below your entry price. We hope this video has helped you understand the basics of the ATR indicator and how you can apply them in your analysis. To learn more about our products or platform, visit our website at ig.com/sgnow.